Hey there, hope you're having a great day. It is Monday, May 23, year of our Lord 2022. I can't believe May is almost over. So I posted today at bayrockfinancial.com and I wanted to do a quick post, a little video. I wanted to put something on the podcast for today, for this week. So if you're watching on YouTube, thank you very much. You can hit the subscribe button and you'll get a notification every time I post a new video like this one. And I'm posting this at Missional Money in the podcast. And if you go to missionalmoney.com, you'll see the post as well. And you'll see a link to the YouTube playlist at missionalmoney.com. But right now, if you're watching the video, you'll see I'm on bayrockfinancial.com, which has the same links. So again, I'm posting this to the podcast, Missional Money, but it is also, it's just a kind of a weekly heads up, what's ahead in the week. Every week, every day, I read probably 20 or 30 articles on financial stuff. And sometimes I kind of discover something like I did today from CNN, which just caught my eye. And that's not a good way to be informed, certainly. But it sometimes happens. And I found this article. It's basically an article from CNN Business saying 3 reasons not to panic, and they show 3 charts which I thought were interesting. So I'm just going to scroll down to each of the charts. One of them is bull markets typically return more than bear markets because bull markets last longer. So this chart just shows you a graph and compares bull markets with bear markets. So if you're wondering, by the way, why I'm wearing the headset, these are noise canceling Bose. They're pretty great. There's a gentleman over here. I'm in a shared space, my office at the University of Houston in the Innovation Center. It's a shared space. And so today I have a gentleman who works over there who's over here having a conversation, and he's kind of loud. Anyway, that's why I'm wearing the headphones. You probably hear a little background noise, but nonetheless. So this chart is one of the 3 charts that communicate don't panic. Here's why you should not be panicking. So again, CNN, I'm not a big fan of CNN, and I typically wouldn't trust anything I read on CNN, but I thought these were interesting charts. And this one is a lot of blue there and relatively small amounts of red, but the red is indicative of a bear market when we have the kind of pullbacks that we're having now. Now, we're not in a bear market. We were in a bear market Friday for about 6 minutes before the market recovered, the S&P 500 or the SPY, which is what I watch very closely. So that's the first chart. The next one is basically saying that these are typically these are the times that you want to be buying, not selling, because typically when we are pulled back as much as we are right now, we're at like 3 standard deviations below the mean right now on any chart. Not any chart, but on most major indexes, including the NASDAQ and the S&P 500, almost 3 standard deviations. That's a lot. And typically the rubber band effect means that when you get that stretched out, you just bounce back like a rubber band would towards the mean. So this is just a chart that says that these kind of pullbacks don't last, and that it's typically a good time to invest. And it shows some percentages or gains when you invest in these kind of nasty pullbacks. And then the last one is the last chart. This is the 3rd chart that says, here's why you shouldn't panic, according to this article from CNN. And I've been noticing that the volatility index has been very tame recently. So with the kind of pullbacks we've had in the market, I would have expected a much higher volatility index. But it's been pretty tame, and this has been a pretty orderly sell-off, and who knows how long it's going to last. But according to this article, these are 3 charts that say, here's why you shouldn't panic. So check it out at bayrockfinancial.com, and you can also find it at missionalmoney.com. If you're listening to the podcast, I would encourage you to leave a 5-star review. Tell me what you're interested in your review, and I'll give you a shout out, and I will try to talk about something you might be interested in hearing about. So my mom doesn't listen to this podcast. Sometimes I feel pretty lonely. So again, again, if you'll leave a 5-star review, it's very helpful. I'm going to be posting more about bull and bear markets, investment strategies, and really I'm going to be talking mostly about financial planning strategies, which are much more important in terms of moving the needle on your financial life than investment strategies. But investment strategies are important, which is why I named this 3 charts for people who hate losing money. I hate losing money. I know you do too. More than losing money, though, I hate losing money for my clients. And sometimes in markets like this, the word TINA comes to mind, which is there is no alternative. Every asset class has been down. The Fed has the power to turn a bull market into a bear market with one policy decision, and that's what we're seeing. Hopefully they will have a little change of mind like they did in 2018. That's very possible. If they do, if they back off a little bit from their rhetoric, from their what do they call it? Jawboning. The Fed likes to jawbone. They talk. And when they talk, the market reacts. And so what the Fed has been saying is that interest rates they're going to do whatever it takes to fight inflation. And that's a good thing. But it's a bad thing too. They're very likely to create a recession if they continue to be as aggressive as their rhetoric is. So chances are they won't be as aggressive in raising rates and quieting the economy as their rhetoric is. And if they change course and become less hawkish, less aggressive about fighting inflation, you will see a rebound in the market that will be significant, because it is the Fed that moves the market more than anything. And that's why we could see a much bigger, more drastic pullback, because if the Fed continues down its course, it could be different than the last few major pullbacks. So we're keeping our eyes on all of it, and I thought I'd just post this to encourage some folks who may be having momentarily panic attacks. I got a phone call coming in. Sorry about that. So that's it for today. I'll see you next time. Thanks for watching. Thanks for listening. And again, subscribe to the YouTube channel if you want to get a notification every time we do a video. And if you like to listen in the podcast, please leave a 5-star review on iTunes. I would appreciate that, and I'll give you a shout out in the next show. Take care. See you next time.